Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, August 15, 2012. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. The first thing you'll see is that futures are trading lower today by about 2 points or 2.5 points. Really right in that range, right to around the 13.99 and a quarter level. Once again, the dollar is moving higher, putting some pressure on the S&P 500 E-mini futures, but they're holding up pretty well for the moment. So we'll see how this plays out a little bit today. If you take a look at the U.S. dollar index chart, you'll see that the dollar has caught a nice little bid and showing fairly good strength today, at least for the dollar right now, trading around 82.80 on the U.S. dollar index futures, and this is the U contract. So dollar holding up, putting a little pressure on the S&P 500. Stocks coming under a little bit of pressure this morning, but nothing tremendous, at least not yet at the moment. So we'll see how this plays out. A couple of things to go over real quick. Last night's market in Asia, not a pretty one for China. China again was down pretty sharply. The Hang Seng was down about 1%, 1.18%, and the Shanghai, which is mainland China, down about 1.10%. So pretty decent decline there in those two indexes. Chinese ADRs can be weak today. Should be followed as weak for weakness if the U.S. markets are soft. So that's how we have to view this going forward, and we'll just see how this plays out. But that is worth noting. Out of Europe today, there's not a whole lot out there that I see that really is moving the market. So we'll sit tight. We'll watch how the markets trade, and we'll just see where it goes from there. Overall, Spanish bond yields are ticking down a little bit. Italian bond yields on a 10-year note are ticking down a little bit as well, and that's really what needs to be followed. All of the European markets are pretty much flat this morning, with the exception of Italy, which is up about 0.8%. But everything else is pretty much flat to down, and we'll see how it plays out. But again, a lot can happen after the opening bell. At 8:30 in the morning, which is about 7 minutes from now, you're going to get some economic data. I believe that it's going to be CPI will be released, and we'll see how the markets react to that. But you will have some economic data coming out at 8:30 in the morning, so that's about 7 minutes away from now. Let's take a look at oil and gold. Gold is trading lower today, down about $8 to around $15.95 an ounce. Nice little dip in gold. Let's take a look at the GLD. And again, the dollar's up. You know what happens. Gold is down. GLD yesterday closed at, I believe, 155.13. Today it's trading at 154.68. So you can see gold is down a little bit. Again, it's an inverse trade to the dollar. Let's take a look at oil. Spot crude this morning is trading lower by 37 cents. Here you can see the USO. USO is trading down a little bit to around 34.79. Closed yesterday at 34.92. So again, dollar is stronger. Oil and gold are both trading lower, and that is really the theme. Even gasoline, you can take a look here. The UGA, if you take a look at a daily chart, I mean, has just been soaring higher ever since the dollar has been pulling back. So gasoline has just skyrocketed over the past month, and that's all on the back of a weaker dollar. Today the dollar is stronger, so I would expect gasoline to come under some pressure. But in any case, that's how it works. Dollar goes up, commodity prices and stock prices go down. Dollar goes down, commodity and stock prices go up. That's pretty much the inverse relationship that we have to watch. All right, let's take a look at some stocks in the news. There's not a whole lot out here this morning, but I'm going to start off with Deere. This is John Deere. Let's get rid of this. Remove that. Let's put in the 10-minute time frame there. You're going to see Deere is selling off pretty sharply this morning. It closed yesterday at $80.13. Looks like after earnings it is trading down to $76.09. Traders have to watch $74.54. There's going to be some support right around that area. So watch that level there. And let me just get you a more defined secondary level here. Yeah, after this, it's going to be down to around the $71 level. Make that $69.50. So watch $74.50, $71, Now let's skip to 70. Yeah, 71.50, 74.50, 71.50, then 69, and then all the way down to 67.62. So those are the levels as follows: 74.50, 71.50, 69.50, and then down to the 67.62. So those are all your levels there for Deere. Deere's a tricky stock sometimes. I've had problems with this stock trading this one in the past, so just realize it can really move when it gets going in both directions. So be a little bit careful with Deere, but those are the levels that I'm showing for support, and you could see some bounces. This is a strong gap down, so you want to be a little bit careful and realize this thing can go lower than you think. Okay, let's take a look at Target this morning. Target is another one catching a little bit of a bid. The stock has been very, very strong as of late. It's trading at 64 bucks. Closed at 63.38. I'm not exactly sure what the news was for Target, but in any case, it is catching a pretty nice bid, and nothing that dramatic or that great. But I would not look to get in front of Target right now. It's still holding up very, very well and has further upside. But if the stock got up to around 66, that could be where the stock could be faded. I don't see a level really before that. So I'm not sure if Target even gets up there today. It's not that big of a mover, but nonetheless, it has strength, and it's still coming out of a pretty strong pattern. So give that stock the upside bias at the moment. Target is showing some strength. Here's a stock that was getting hit this morning. Staples the stock closed at $13.45 yesterday, trading at $11.18. This is just an absolute mauling here. Traders should be very, very careful with this one. This is a strong gap down. I think the stock could actually go even lower. When I look at the chart of this, it really doesn't tell me there's much strength here. You're going to have a little strength. Wow, this thing could go down to $9.50. So be careful with Staples here. There's really no reason to get in front of it. It's a strong gap down. It's trading down to 11.18. Ultimately, I think the stock can go lower. It's definitely already getting extended here, but I don't see why it couldn't go lower. It looks like to me, yeah, I really don't see it. I mean, this stock could go to 10 bucks and possibly head even lower than that. The next big support level that I'm seeing personally here for this stock is probably around $9.40, and then ultimately 8 bucks. So let it go lower. There's really no sense to get in front of Staples. It's a strong gap down. It's already it's jumped lower than most people thought, and these stocks like this can go a lot lower. So really, it's going to be 8 bucks though. I would play that for a bounce. So Staples gets down to around the $8 area, maybe 7.80 level. I mean, I would play that for a bounce. I know that's still far away, but it's a strong gap down, and these things can take place. We're just a few minutes away from, I believe, the CPI number, so we'll stick around and we'll watch and see if how that plays out. But again, I'll put up the ES futures here, so we'll see how the markets react to the CPI number, which will be released in just about 1 minute or less. So we'll see how that plays out going forward. Looks like Abercrombie and Fitch also had some earnings today. Oh, the stock's catching a little bit of a bid. It's been a strong name, Abercrombie, for about a week now. So upside on Abercrombie and Fitch would be around 36.44. If it got there, that'd be the big resistance level. I wouldn't do anything prior. I'd leave it alone. There's nothing to do. Okay, looks like we do have the CPI number being released. Markets are starting to sell a little bit. So markets are starting to sell a little bit. The dollar is also coming down, so that could save the markets. And you can see the market starting to come right back up as the dollar trades lower. But it looks like July Consumer Price Index, 0.1%. So again, I could care less about the numbers. We only care about the reaction in the market. And so far, it doesn't seem to be anything spectacular one way or the other. It's a little bit on the muted side, but the market trickling down a little bit and now coming back up. And you can see if show you the dollar chart here. You can see how the dollar started to come back down. When a dollar falls, obviously that inflates the stock market, and you can see how the spiders over the S&P 500 E-minis went down and then have come right back up. So we'll leave it there. We'll see how it trades out a little bit later in the day. With that said, everybody have a great morning, and we'll see you on the charts. Take care, everyone.